Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a brief look on the euro currency. So in general, you could see that our suggestion was correct. Market indeed stands under pressure. It's not only euro currency, but as we said, it's Great British pound, other currencies, gold market. And actually, it's absolutely not surprising, because if you take a look at the performance of the major financial assets such as interest rates and dollar index itself, you could see what the pressure now exists on the market. So if you take a look at the 10-year bonds, yesterday we've got another upward action. It's really significant. Right now it stands almost 4.1 area, very fast and strong rally on the 10-year bonds. Here we even can't speak already about the head and shoulders, and because the upward action stands really fast, and most probable that we will get one of these targets, or maybe one of them we already have got it. So you can see that 1618 nearest destination point for the yields will be around 4.15. So it's rather significant action. So BlackRock already has tried to somehow justify this action, that it is normal. So it is reflects that fear valuation of the 10-year and in general United States bonds at the eve of the elections, which is actually mostly this also could be explained by the rising of the risk and uncertainty and so on. But I suppose that this mostly reflects the degree of entropy in global finance. So if you take a look at the performance of all markets, you could see that the coal market, bonds, and S&P index stock market are rising together. Definitely S&P here is out of place. So here's something really should happen, and I'm just scaring a bit that the rally on the 10-year bonds, despite the rate cut, it's just a reflection, might be a reflection of the two things. First is a lack of the liquidity, so amount of the dollars becoming not sufficient for everybody, because this the liquidity demand stands on not only in the United States, it's also across the globe, and actually in all the J7 countries exist. So everybody uses the margins in a dollar, and so everybody needs the cash to just close the gaps. As first moment. Second moment, might be the indication of the coming bad times, that inflationary expectations are rising really significant. And that's also not surprising if you take a look at the commodity performance and in general on the performance of the United States economy itself. So from that standpoint of view, our conclusion that we have made yesterday, that maybe not makes sense to be to hurry up with the position taking, just better to stay calm and see what is going on, waiting for the CPI numbers today, see the market reaction, then start looking for patterns. It seems that well, this was really correct decision. Besides, take a look, guys, if you'll take a look right now on a daily chart on euro currency, it's one more sessions, and on a daily chart we could get great thrust. So previously we have agreed to take a look at the 4-hour time frame thrust and trying to catch there some Napoli pattern. But now, as you can see, my market is moving lower. It's already on the daily chart. We could get the really nice thrust by the end of this week that we could use separately for considering Napoli patterns on next week, right on the daily chart, which is currently very interesting. So here, as you can see, market is testing this area. Now it's almost stands slightly actually below this lower border of this. And this another reason why we think that we should not hurry. We can't exclude that might be the breakout, especially if you take a look at the performance of the, as I said, yields and the dollar index itself. So here we're just waiting for signals from the market concerning about the response to the level. On the 4 time frame chart, I'm not sure that we could speak anymore about double repo pattern by the main reason that usually when the double repo is forming, and actually this also might be treated as another sign of the weakness on euro currency. How usually works double repo? When the market hits some support area or stops by some other reasons, market starts the pullback, and the traders who trade downside direction, they're just very thankful for this retracement, using it for taking the new short position. Then in the moment of the breakout of the lows, is market makers start selling, trying to break and touch the stops to close their positions that exist right there. Also, additionally, breakout traders also start taking the short position. Then some breakout happens, market maker starts closing their positions, and upward action happens really fastly. So stops have been grabbed, market makers actually closing positions on the stops that have been placed here, and market return right back up. It means that all traders that have been taking short position here and here, breakout traders, now are trapped in the wrong direction. They start closing by the stop loss orders and double repo accelerating. So this is the mechanics, how it works in general. And here we do not see it. Let's take a look. Downside breakout below lows, and market stands here. No wash and rinse, no upward acceleration. So from that standpoint, I wouldn't call it as a double repo right now. And if you take a look at the performance here, well, I do not see something really interesting. So no response, nothing. Yes, we have some divergence, but it's too few to make the decision for position taking. I prefer to get something more. For example, if market will start forming kind of the hand shoulders pattern, we could think about taking long position with possible retracement. Right now, especially if you take a look at the cable, and here you can see that XOP also has not been completed yet, so market still has room to move slightly lower. So on the daily chart, you also could see that the confluence area has not been tested. In the current circumstances on euro currency, I prefer to wait. So 109.20 area seems might be touched today. It's next downside extension that we have, a very small extension on the hourly chart. And then we will see, because it will be 1618 extension, we will see what will happen. But for now, I do not see any reasons and signs for position taking immediately on euro currency. So market looks weak. It shows intraday signs of weakness, and I not exclude a situation where we just will get downside breakout and downside continuation. On the daily chart, this also could happen to the next support. So this is also possible. So don't be really active too much in the current situation, and if you would like to take a long position, it's better to wait and see what will happen. For a short entry, the same story. So market stands at near support, near reversal. It would be better to try to get some pullback, some moderate retracements, to consider a short entry. In this area where market stands, this support, trend line, next support, so this is not very comfortable to initiate the new short position right there, especially at the eve of the CPI report.